Hello traders, hello everyone, welcome to our new free video analysis where I want to give you a quick update on the US dollar or euro, I should say. So what is going on? Well, as you know, we are seeing some price stabilization on the euro dollar pair after it reached this 2017 level. So definitely it's a very important support down there. We also have a lot of ECB members highlighting that they could actually do the first rate hike this summer. They will be looking to move out of negative territory. So of course this is something that is driving the euro bullish speculations at the moment. So this gap between central banks, between the Fed and the ECB is actually is narrowing, and that has also an impact on the currency markets here. So from an Elliott wave perspective, I see a very nice reversal. We were actually looking for this fifth wave to the downside. I also posted a lot of free material recently on our channels. So we have been looking for a fifth wave move to the downside, which came out of a triangle. So this is the key structure. Why? Because in a triangle you will see a lot of market trading in both directions. A lot of traders will try to play or catch the direction, but usually this triangle takes so long to unfold that a lot of traders will give up. So when they suddenly see finally the breakout, the price that is coming out of a triangle, that's when actually there are majority of traders who want to catch this move. But unfortunately that's too late. So it's overcrowded trade, and that's usually why it's not working. So actually this represents market trading in a fifth wave. Usually the opposite reaction happens, especially when you have also this a lot of bearish sentiment around the Eurozone at this level. So that's something that we have to consider, because we know that markets move in cycles, especially if we move into some extreme of pessimism or optimism. You just have to be aware that market will at some point turn. Maybe we are not, maybe we don't know yet what will cause the turn, but eventually we know that sooner or later will happen. So for now, what we are seeing, well, we are seeing a very nice recovery here above this impulsive channel. So it suggests that this market is actually in a higher degree can be just another free wave correction. But I think that this 106, 106.50 is a strong resistance, so be aware of this wave B setback. But then eventually I think that next week, especially because now it's Friday, if we will close around 105, I think that we could continue even higher after a setback next week. Also, what I wanted to highlight here, we had a divergence here at the bottom. So notice that previously, when this market has been trading down here, still in a wave free, well, notice that there was no divergence. So always when I try to say that maybe the market is in the final stages of a downtrend, I want to see a divergence. So back here at the end of April, start of May, we still haven't seen a divergence. Okay, so that's why, and especially after this then triangle, that's why I was continuing to look to the downside. But then we had a divergence when market broke into the fifth wave. So that divergence and this 5-wave drop was quite important evidence for this reversal that is now happening. And since we have this broken trend line, well, I think that market can see more upside. So as I said, 108, I think it's a reasonable upside level. However, don't forget that in a higher degree charts, we are still bearish. We just recently called this end of this wave 5, and that we are now possibly even rallying into this higher degree wave 4. Also, let's take a look on the S&P 500. So here on the S&P 500, I also shared this recently. It's quite interesting time projection here. Notice that I'm tracking a complex corrective decline from the highs. I always want to somehow to look if the price action says so, and not invalidating any rules. I will always try to label each pullbacks within a high degree uptrend as a correction. Okay, so that in such case odds are obviously on your side here. So what I'm looking at here, is I'm trying to compare the second leg of this complex correction to the first leg. So WXY is what I'm tracking here, and notice that here we have 221 4-hour bars, and now we have the same time length of this current drop measured from end of a wave X. Okay, so what I'm seeing here is quite an interesting time for a potential new swing, okay, meaning for potential price stabilization. Could be just temporary, we don't know that, but I think that this is quite interesting level, especially interesting timing, especially if we also consider that this lag current one to the downside is not equal only in time but also in price. So I'm really curious to see what will happen at this 3,800 area. If we can rally here and maybe broke this trend line resistance, then I think that this could be quite positive for euro. Maybe even Aussie could be, because of commodity currencies, could be even better for if stocks will continue or will reverse from that bottom. Keep in mind that DAX is somehow trading much better compared to the S&P 500. So if S&P 500, which is somehow trying to be global indicator for stocks, well, if this market will at some point try to stabilize, I think that other markets will follow, and this could be very bearish for the US dollar, even if just short term, and euro, and as I said earlier, commodity currencies could be quite strong. Also, why I think that Aussie could do a very interesting reversal, let me take a quick look at Aussie here, is because we also had a divergence here. We are now already trading around this trend line, if I'm not mistaken. Let me take a look here real quick on Aussie dollar. So on Aussie dollar here, on the 4-hour chart, okay. So we are now at this trend line. We are trying to form maybe even head and shoulders reversal pattern. We are at this trend line, so this trend line is going to be broken, especially for the end of the week. Then I think that more upside could be here in the cards. Also, don't forget, Australia has government elections this weekend, so of course this will somehow impact this pair, but I think that at some point next week, that again traders will look back towards the Bank of Canada hawkish look, and that's why I think that on any dip, I think that Aussie dollar could be still attractive for potential more upside. Also, China is going back to work. I think that they will go back to full economic activity in June, and this also, as you know, will have a positive impact not only on Aussie but maybe also on other markets as well. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. If you are interested in more of those our analyses that we cover on a daily basis, check our website wavetraders.com. We have a special free trial for 14 days. Okay, traders, have a good weekend and talk to you soon. Bye.